Well, what we've heard them say, Scott, Fed Chair Jay Powell and others, is that they can't and they will not and they cannot ride immediately to the rescue here of these markets and the economy. And that's despite what is clearly surging recession probabilities. And you can see why in the flash Fed survey we did over the weekend. Take a look here. The recession probability up by 33 points since January to 56%. So it's not just JP Morgan. It's a lot of the street is up there. That's the fastest rise we've seen to a number like that. And then you heard Torsten really lay it out. Very similar numbers here. Down 1.7 on GDP for the year to an anemic 0.7, and then up 0.9, call it a percentage point, to a place the Fed is not going to be happy about, 3.6 on the CPI. Well, what's their dilemma? They have inflation and inflation expectations on the rise, or at least elevated. The Fed wants to hold on to its hard-won inflation progress, so it's not going to be pleased with these inflation numbers. And Fed Chair Powell is taking a tough line, as he did on Friday, saying the Fed has an obligation to keep tariff inflation from being a one-time increase and not spreading beyond that. What could the Fed bring into play? Is concern over systemic risk. There's no evidence of this happening now. Got to watch it, though. It's unlikely to act preemptively, though, despite urging from the president. Here's Douglas Gordon. He's senior portfolio manager at Russell Investments, writing in with the survey. The Fed looks increasingly behind the curve as it waits for greater clarity from the Trump administration. As a result, recession becomes the more likely scenario unless there is a timely pivot, there's that word, towards trade deals, rate cuts, or both. But the Fed, Scott, I'm afraid, is going to need to be convinced that the risk to employment is worse than or greater than the risk to inflation.
Or that issues, thank you very much, Steve, by the way, Steve Leisman, or that issues start to pop up in credit markets. Investors watching those markets very closely for any signs of stress.